Thanks so much for taking a little bit of time to learn more about our Debt Free for Life program. And I know you already know this, but debt is hurting your ability to accumulate wealth and is standing in the way of your financial freedom. You know, it was Albert Einstein who said compound interest is the eighth wonder of the world. And he went on to say that he who understands it earns it, and he who doesn't pays it. But I want you to understand just how powerful compound interest is when it comes to your money. You know, compound interest is going to either help you accumulate great wealth or is going to hurt you when you're paying for somebody else's wealth. And I got news for you. If you're in debt, guess which one of those applies to you? You know, lost interest is not like fine wine. It does not get better with time. And the longer you let that interest hang around, the more it hurts you when it comes to accumulating cash assets. If you're in debt, you already know you have a problem, and here's why. If this check represents the amount of money you earn each month, now you may make more than that, or you may make just a little bit less, but the concept is the same here. Before we get that check, they have deductions like federal and state taxes, possibly health insurance, and if you're lucky, you're contributing to a 401k. But what's left over is our net earnings. Now, those net earnings are what we use to pay for our lifestyle. And our lifestyle would include things like rent or mortgage, car payments, living expenses, and what other debt obligations you're responsible to pay. Unfortunately, for most of us, there's not enough money left at the end of those net earnings to really accumulate any kind of cash assets for our future. Now, our gross income says we can have nice things, fancy cars, nice purses, and live in the best neighborhoods. Our net income tells a different story, though. That car may not be quite as nice. That might not have been the purse you wanted to buy. And that house that you're living in may not be near your family and friends. But because we've been conditioned to do so, we don't have a problem by taking out a car loan to buy that nicer car, or buy that purse using a credit card, or signing up for a higher mortgage. This is exactly what the debt trap looks like, because everything is based on monthly payments. Just like you, most Americans face this same income reality. And the people at the Bureau of Labor Statistics have done an exhaustive study on the average American income, and what they found out was shocking to learn that 25 cents of every dollar that we make, both before and after retirement, is going to pay for some kind of debt. Now, that might not be the exact number for you, but it's surprising to know that the average American has that much debt that they're paying for on a regular basis. So look at the difference when we can teach you how to reduce or eliminate your effective interest costs. That is a significant swing in your favor to help you increase your spendable income both now and in the future. This is exactly what most Americans experience every single month. The money that they owe to bankers and lenders is significantly higher than the money they pay themselves. And unfortunately, most Americans do not even have a regular savings program to accumulate cash. If we can teach you how to spin the tables on compound interest in your favor instead of for the bankers and the lending institutions, what if we were able to move your money more to your savings plan and less into what you owe? What would that look like for you? I want you to meet Max and Megan. These are clients of mine that came to our office and they had a problem. Basically, they had way too much debt. Their money was compounding for banks and credit card companies and not for them. And they like to have nice things, but they often did not have the money nor the resources to pay cash for those nice things. And their typical default option was always monthly payments. And unfortunately, this was a trap that continued to hurt them. Their debt situation looked just like this. Their credit cards were about $3,900. They had some student loans for about $31,000. And they had a mortgage for $184,000. Their total debt liability was about $219,000. But the real issue was this: 35.3% of every dollar they sent out of that house was going to pay their effective monthly interest cost. If they stayed on their current plan, it was going to take 26 years to pay all this debt off. If you wanted to understand what your effective interest cost is, the math is pretty simple. It's your monthly interest cost divided by your minimum monthly payments. In their case, their monthly interest cost was $915. Their minimum monthly payments was $25.90. If we take the $915 divided by the $25.90, that's how we were able to come up with the 35.3%. Now here's where the real problem was, and I said it before and I'll say it again. 35.3 cents of every dollar that was going out of their household was going to pay for somebody else's interest and not to compound for them. The real question was this: where in the world were they currently earning a 35.3% rate of return on any of their investments, their savings accounts, or their retirement plans? And just like most of our clients, the answer with that was real simple: nowhere. They weren't earning 35.3% on any of their investable assets. The secret here is very simple. When your money compounds for you, it is always better than compounding for someone else. And here's why. When you give someone else $1, you forever lose the ability to earn compound interest on that dollar in the future. Max and Megan were 100% debt-free when they committed to a debt-free for life action plan, when they learned the math on how money compounding for them was better than compounding for the banks. And when they were done, they completely eliminated $219,000 worth of debt. And the good news is this: instead of 26 years, they were able to pay everything off in as short as 8 years. But the especially good news was this: not only did they pay off $219,000 in 8 years, where they were 100% debt-free, but they also had $149,000 in cash assets. And I want you to think about that. What if this were your story? What if you were debt-free with $149,000 in the bank where you could do whatever you wanted to with that money? If this interests you, we want to teach you the math and what it looks like to be debt-free for life. And if you want to learn that too, request a free introductory session. On our screen up to the upper right-hand side, you'll see a space there where you can schedule an appointment with us. That link goes directly to our calendar link. There you can set up a 5 to 10 minute conversation just to say hello, to learn a little bit more about our Debt Free for Life program, and to find out if this is applicable to you. We also have a chat function on the screen where you can ask us a question right now, and we'll get back to you as quickly as possible. If we're not back to you immediately, I'm either helping one of my clients or I'm helping another advisor learn how to do this same process too.